Now, Dow Jones lost 1,600 points overnight, but is it engineered by Donald Trump and friends? Well, if that is the case, will the Dow break below 40,000? And what should you do after this? Now, guys, I've been calling for this sell for a long of time, and I've been telling you guys that from the start of January, we will see some selling, and it's all coming in right now. So before I go to this video, disclaimer apply as usual. Now let's take a look on what happened, guys. Okay. Now we saw this thing, right? The Dow Jones lost 1,679 points. All right, it's because we know that Donald Trump, he is basically sending a lot of messages on his tariff, and he believes that this is going to be good for US side. And of course, we know that more than 160 other countries are all involved in this tariff. And now more to meet will be whether there will be more coming in. So with that itself, right, the S&P have lost $2 trillion in value since the start of this year. Now, one thing to note, guys, if you remember this, I told you guys that if you're going to be rich for 2025, just look at what Warren Buffett did in 1969, 1987, 1999, 2008, and probably this year. Go to this video and you will know what to do. And if you look back in this video 4 months ago, I wrote that S&P may pull back by 15% by the first quarter of 2025 as the yield drops. All right. So all this tells you that now why JP Morgan lift global recession odds to 60% as the US tariff stock fears. And Goldman Sachs raises probability of US recession to 35%. All these are just recently. So if the S&P really to fall, you can see the S&P coming off from the highest point right here. All right, over here. Okay. Okay, let me just clear everything up. At 61.43, the S&P has came all the way down to the 95 to the 90% recently, and now we have, because of the tariff, it broke below the important 90% support level. So this number 5222 will be the number that we are all looking right now. So guys, hang on to this. I believe that at 5222, the market will have some support. All right. So let's look at the Trump and his tariff. You can see that China is definitely the #1 country aiming, and total tariff charge on them is 67%. Oh my God. Okay. Vietnam itself is also very high, and that's the reason why a lot of countries are being hit. Now even Australia, all right, but a few countries in the world that have a good trade surplus didn't get stopped. In fact, Australia still get whacked by a Trump tariff anyway. And of course, right now, those companies that do a lot of this merchandise that's in Asia, as well like Vietnam, all right, they are badly hit. That's why Nike dropped by 14.4% overnight yesterday. And if you want to know how they calculate this tariff, you can go to this website, consensus.gov. You can see how they calculate there. You will see how they form the numbers. Now, one thing to note is that the Donald Trump real intention is to force Jerome Powell. So there are some speculation saying that the reason why the stock market is coming down because Donald Trump purposely triggering this because he wants the Federal Reserve to consider to cut interest rate. But we all know that, right? Federal Reserve is totally independent. They don't really care about what the president say. Obviously, Donald Trump, and so Donald Trump instead decided why don't just blast the market. So apparently itself, right? They are saying that there could be a theory that Donald Trump wants to tank the market. So the reward himself and his supporter. And when the market is cheap and good, well, it's all possible. So in think you're gonna ask this question: why Donald Trump cannot remove Jerome Powell? Because of market rebellion, variety of advisors, and Federal Reserve is an independent entity. All right, to act they wish. All right, they can do whatever they want, whatever they wish for. So now the thing is this: now the Dow is a correction, not a recession. So how do we differentiate the difference? Right, a bear market is when a security or an index drop off more than 20% from the recent high. So a correction is just 10%, a bear market is 20%, a collapse is at 40%. So you look at it right now, right? Every time after a 20% pullback on the average itself, the market do recover. So that's the reason why, to me, is that if the market do drop by 20% or more, you shouldn't be panicking, but you should look at to buy instead. And that's why I say 2025 could be a good year for everybody if they follow this rule. So one thing to note is that usually this bear market is accompanied by economic recession and high employment. But at the moment now, we do see the economic data are a bit soft, but high unemployment, we're still not there yet. But in fact, it's a great opportunity to buy. That's the reason why I say 2025 could be a good year for us. So you look at this bear market and recoveries, you can see that the decline on average itself about 20 to 25%. And then after that, the length of the bear market has on average about probably about what 3 to 10 months. But one of the fastest ever was in February 2020 during the COVID time. And in fact itself, right, that's whereby you can see it's not too long at the moment now. And Warren Buffett and Jack Bogle, they always argue on this long-term success is a buy and hold, and I totally agree on this. So it's never a right time to just buy when the value is there. It's just like a game. You should look at it as a form of a long-term business, but also don't get overconfidence because you may buy in at the wrong time and the price may go lower. But of course, expect the worst and stay consistent. And remember, after the best days are always for the worst. All right. So the thing is, right now we do expect Donald Trump to contradict usually do again, right? It means that he said tariff now, and then later again he will say that let's negotiate. He's always basically give his White House aides a little bit of problem, but that's how I believe will happen. So watch out for this. This may actually open up the door. So short sellers, be very careful on this. And one thing to know, right? We all know that they have been calling for sell on Tesla since here itself when it was trading about 350. And of course, every time it goes below my target level line, it went lower. So recently, my line have changed to a buy instead, okay? And we saw our indicator looking to buy. So the whole board is selling, right? But my big boss indicator indicates buying. And of course, we all know that Elon Musk says that people like George Soros and Hoffman probably are shorting the market, but Donald Trump came in to support to buy a Tesla, right? So I suspect that this is going to be a turning point. So two things to note, okay, if the Tesla shares really come back down and go below the 218 mark again, then yes, the selling will persist. Because we are seeing now boys buying into Tesla, but yet if the market can pull it back down to 218 and below, then that will continue the selling wave. But if not itself, right, the market could be going back up again. And with that going to happen, this is going to send a strong statement to everyone that the stock market itself, right, may not be as weak as what they claim. So it's going to be an interesting fight here. So watch out for Tesla. This could be the very pivotal point on the stock market. And of course, I have a chart to share with you and explain to you how does it work. Let me go to the chart right now. Okay, so this is the US Dow Jones chart, right, that I created since 2019. Okay, you take this lowest point 2019 as a low, and then we do a Fibonacci to the highest point back then in 2021. Okay, so what you do is that from the lowest point to the highest point A to point B, okay, you see that when the market came back to the 23.6 first pivot, you see it stopped there beautifully, and then it rebounded, right? Nice. But what is crazy is that when it came down again, it came down to the 38.2, okay, you can see over here, and it rebounded. And only when it came back down to the midpoint between the 50 to 38.2, that was the base level. Okay, got an idea now? Okay, good. So let me just now clear this up. So be not so confusing for you. Okay, let me take this away. Okay, so now let's see the Dow Jones today. Let's take a look now. Okay, so if you look at the Dow now, that this is the key point. I'll show people now. Taking this point low and stretch it up to the highest point of the Dow. Now you can see that we have something similar, which is that the market, okay, came down here nicely, hit the 33.6 nicely, beautifully here, and then after it's a wrong rebound, right? And when it came back down, okay, it smashed below, but didn't go down. But now today it's here at the 38.2, okay? So if you look at it, right, this is actually a very interesting neckline of the market. Every time when the market comes to this point here, the market usually stages a rebound, right? But if the market breaks below it, it goes down to the next number, which is 50% mark. So if I look at it right now, I'll suspect that this will happen. If the Dow Jones, okay, breaks below the 40,000 mark, it will send a short wave down, probably to here, which is about 38,600, okay? Now, I don't think the market will come down so fast, probably in the midpoint, all right? The midpoint of this, so probably about 39,500. Okay, so I suspect that will happen. And of course, you look at RSI, we're definitely at the very oversold level now. But because you can see that the RSI, although it's at the low end, but the price is going down, it's a very strong divergence. So I believe that the market will have to test 39,500 first before we can see any clear spot. And of course, you can see the technical point A, B, C, the market has broke below it after the 1,600 point drop. So it's pretty clear that we may have to see a bit of more selling in the near term. All right, so that is one chart to take note. And the other one that I want to share with you will be this one here. Just give me a moment. Okay, next chart here is this. at this level here. Now, I did the maths for you just now, I told you that. So we take the highest point, okay, the highest point here, and we do a 5% reduction mode. We'll notice that the 90% mark and the 85% mark is to this number, which is 40,626 and 38,369. So the midpoint of this, the 50% mark of these two numbers, we get 39,497. So this number and the Fibonacci numbers are about the same. So that means that the Dow could really test below 40,000 and go for 39,500 series. And that is where I think will be a very good price for people to buy back into the market. All right, guys, let me know in the comment box and hope you enjoyed this video. This is Cal signing off. Take care and have a great day. Bye-bye.